Boom shakalaka, boom shakalaka. Okay, I know I haven't been doing this market analysis over the last few weeks because recently I opened enrollment for the trend following mentorship program. So things were busy back then, right? Making sure members are getting accommodated, right? Things are getting comfortable for them, and hey, right now things are more settled, right? This is where the weekly market analysis is back, right? So in today's video, right, we will look through, right, the financial markets, right, what's going on in the forex markets, the bond market, the index, right, as well as identifying the best trading opportunities, right, for this coming week, right? So all this and more, I'll see you there. Okay, so the first market that we'll have a look, right, is euro dollar. So you can see that, just to zoom out a little bit, euro dollar right now, it's at this area of support around the 11550 area, right? You can see that market is making a bit of lower highs into this level as well. So this usually is a sign of weakness because it tells you that the sellers are willing to sell at these lower prices. Okay, so my take for euro dollar is that I'm on the sidelines right now. Okay, so a few scenarios that could happen is that, number one, euro dollar comes into an area of support and it forms a build up. A build up is where the market makes a tight consolidation, something like this, where the range of the candles get tighter and tighter, and then I'll be looking to short the breakdown of this build up, the lows of it, right? So if that happens, right, I will short euro dollar. So that's one possibility. Another possibility that I envision, right, is that this market could also just simply break down. Right, there is no build up and it just break down. So at this point in time, I won't be in the move, right? I might have missed it, and another plan that I'll look at is for the market to make a pullback, a weak pullback, otherwise known as a bear flag pattern, right, where you see the range of the candles get smaller and smaller on the pullback, right? And if it does that, right, then I'll be looking to short the breakdown of this lows, right, if that happens. So that is another scenario that can possibly happen on euro dollar as well. And yeah, but I think this pretty much are the two common scenarios that is likely to happen on euro dollar. Alternatively, this market could also do a a strong retracement, right, back towards this area of support, right? It does a false break, close lower, then this would be another possible setup to go short on this false break of resistance. So this is for euro dollar, right? Bearish on this at this point in time. For pound dollar, this is a little bit different because if you look at pound dollar, you notice that this market is actually in a trend channel, right? If I just draw out this over here, okay, so you can see, just Control C, Control V, you get this out. So you can see that a trend channel is slightly different because this market tends to break the previous low, right? Break this, and break this, and you don't want to short the break of the lows. Reason being is that in a trend channel, whenever the market breaks the prior low, it tends to do a pretty strong rally. You can see that it rallied back towards the higher end of the channel. This one rally back towards the higher end of the channel. So to trade this type of market structure, I would say it's much more favorable to be trading as the market retests back towards the upper boundary of the downward trend channel, right? It's better from a risk to reward standpoint, right? You have a tighter stop loss and there's a higher probability that the market would continue down in your favor, right? So this is pound dollar, right? Slightly different from euro dollar. Okay, Aussie dollar on the other hand, right, this one is similar to euro dollar because as you can see, right, this market is also in this so-called range over here. Okay, and my take on it is similar to euro dollar, right? If it forms a build up at the area of support, I would be looking to short this, or if it breaks down and does a pullback, right, I can also short the break of this swing low. Alternatively, it could also retest back this area of resistance, and I'll be looking to short the false break. But in this case, I believe the 4-hour time frame, it's better to look for a false break because you have a much cleaner price action over here, right? You can see that this is the area of resistance. If it comes in, right, comes in up higher, and then market suddenly do a sudden reversal, like a bearish engulfing pattern, a shooting star, and then it collapse lower and then close near the lows, right? At this point in time, right, this is what I call a false break setup because the market attempted to break out of the highs and failed and did a 180-degree reversal. So traders who long the breakout are now trapped, and I want to take advantage of this phenomenon. So what you can do is go short and just have your stop loss right above this high, so right somewhere here, in anticipation that the market could continue lower. Right, so this is how the false break setup works. Alternatively, right, the false break setup can also appear at this area of support. That's a possibility as well. All right, so this is for Aussie dollar. So moving on, I want to talk about dollar Canadian, right? So dollar Canadian right now, market is at this interesting level. It's at previous resistance that could act as support, right? But you want to ask yourself, right? Do you want to go long at this point in time? If you look at the price action on a daily time frame, I don't think so, right? Because you can see that this market is still heading lower, right? You can see a series of lower highs and lower lows. I mean, you can't see it clearly on this time frame, but pretty much the price action structure is still showing signs of weakness. If you look at the 4-hour time frame, it would be clearer, right? As you can see the lower highs and lower lows that's coming in. So at this point in time, right, you see a series of lower highs and lower lows. Who's in control? Well, clearly the sellers are in control. That's why you have a series of lower highs and lower lows. So even though it's at an attractive price level, right, there is no indication, there is no confirmation that the buyers are willing to step in to push price higher. Right, so what I'll be looking for, or what you can look for, is again to let the market tell you that the buyers are regaining control. So what you can do is that this is I would say is a key level to reference from, right? This is a previous support acting as resistance. So if the market can go above here, breaks above it, right, then it does a pullback, right? Somewhat looking like a bull flag pattern, and then it breaks out higher, right? At this point in time, if this happens, now you have a series of higher high and higher low from this low. And this is a sign to you that, hey, now the market could possibly hit higher. And on top of it, right, it's having a confluence of this support on the daily time frame. So if this happens, this is where you have more confidence, right, in taking a long trade, instead of right now it's still premature where it shows that the sellers are still in control. You may want to let the market, or rather let the price action structure tell you that the buyers are in control before you take on a long position, right? So this is usually where it pays to wait on the sidelines and let the market tells you where it wants to go. Okay, so this for dollar Canadian. So another interesting market that's worth looking, it's the dollar Sing. Okay, so if you look at dollar Sing, right, again, just zoom out a little, you notice that this market has come into this area of resistance. Okay, and in fact, it's still hovering here for over the last few weeks, month or so. So if you look deeper, right, this market actually is showing some signs of strength. You see a series of a couple of higher lows coming to this resistance. So what I'm looking for is for this market to come into resistance, right, form a build up, range a while, and then break out. If that happens, right, I'll be looking to trade the breakout, and I can just reference this low, right, to set my stop loss, right? So dollar Sing, a market worth looking at. Another one that it's not in my watch list yet is the dollar ruble, also worth watching. You can see the dollar ruble, right? Zoom out a little. Why not just look at the weekly time frame first, right? If you look at the weekly time frame, dollar ruble has been in a volatility contraction. Ever since we have this huge spike up higher, the market just went into a doldrum, right? The volatility has shrank, range of the candles getting smaller and smaller. So at this point in time, I'm still bullish on this. Market has not, break back into this range over here. In fact, it's still holding up pretty well, right? In fact, if you look at the daily time frame, which is what I want to share with you, you notice one thing is that this market has a bullish chart pattern that's forming, right? You can see this. What is this? Right, this is what is known as a ascending triangle, right? This is a sign of strength because you can see that the buyers are willing to buy at this higher lows, higher and higher prices coming into this area of resistance. So you can be sure that there are traders, right, who are short, right? They will look at, hey, the market is, at resistance. Let me go short, set my stop loss above this highs or above here. Maybe some of you are already short, right? And to me, this is a trade that I want to be long instead because it tells me that the buyers are willing to buy at higher prices. And if it does break out, it triggers this cluster of stops. It might, induce further buying pressure to push the price higher. Because if you think about this, right, stop orders above this highs, what are they? They are simply buy orders, right? Because if you're short, right, and you want to get out of the trade, you must buy back the position. So those are buy orders that could potentially push up the price, right? So this is a dollar ruble. It's a breakout trade that is worth keeping a lookout on. Okay, so that's generally what's going on in the forex markets, right? Moving on, let's have a look at the bond markets, right? The 10-year. So the bond markets is also pretty boring. You can see that this is the area of resistance that I'm looking at for a possible short setup. If the market comes in, right, gives you a false break setup, that would be a nice entry trigger to go short. In fact, there was one that occurred sometime back. This is the false break, right, that happened. You can see that market came into this area of resistance, right? Then it took out the highs, this candle over here, and then reverse and close lower. So you can see that traders who are chasing the breakout, oh look, so bullish, let me buy down here, right? The trend is going to reverse. Bam! They got stuck, right? As the market did a 180-degree reversal. So this is how you actually, take advantage of this group of trap traders. You can go short, right? And have your stops just above this highs, right? So this is one example of how the false break did work out, right? But now it's pretty much in the range. So depending how you manage your trade, right, there are different ways to manage it, whether you want to take profit near the lows or have a trailing stop loss and etc. All right, so this is the 10-year Treasury bond. All right, I'm bearish on this. Same for the 5-year and the 30-year. So moving on, right, having a look at the index, right? So generally, stock market index, it's bullish, right? If you can't tell whether the trend is up or down, right, just pull out a very simple indicator like the 200 period moving average. I've always tell traders, right, if the price is above the 200 period moving average, right, stay with a long bias, and if the price is below it, have a short bias. Now, this isn't a because often I have traders asking, hey Rayner, so the price right now it's let's say above the 200 MA, right? But sometimes you're looking for short setup. Why is that? I don't know. Why are you going against your own rule? So this isn't an ironclad rule that I have for myself. This is just a guideline, a general guideline for traders who are not sure how to define the trend. So this is something that I teach them, and they'll just use it as a guideline. But if you're an experienced trader, you can read the price section and you know what you're doing, right? Then you don't really need to pay attention to this, right? This is just serve as a guideline for new traders to help them define the trend so they are trading in the right direction more often than not, right? But if you're a pro, right, you can read the price section, you don't need it, right? Just go ahead, right, and do what you're comfortable with. Okay, so for this one right here, the S&P 500, right? Generally, the trend is still towards the upside, higher highs, higher lows. I don't have any entry trigger for this, right? But what is possible is that if you look at a 4-hour time frame, right, this would be a possible level to look for. Okay, market could come down, give you a false break setup, right, and get long, right? Something similar happened over here back then. Right, so this for the S&P 500. Moving on, have a look at gold, shall we? Ching gold. Gold's under non-agriculture. Gold. So you can see that gold is in a downtrend. In fact, it's in a strong downtrend. How do I know that? You just pull out your 20 MA, right? Usually in a strong trend, the market it's below the 220 MA, right, for a strong downtrend, and vice versa for a strong uptrend. So this market, right, is in a strong downtrend, and a few ways to trade this type of trend is number one. The easiest one is actually to trade the break of these lows, right? Trade the break of these lows. Okay. Alternatively, if you can time your entry on the pullback towards the 20 MA, that would be possible as well, right? So we can see that this market tends to bounce off the 20 MA. So what you can do is that as it approaches near the 20 MA, you can go down to a lower time frame like the 4-hour and look for a false break setup. So in this case, right, you pretty much got this one over here. It may or may not have a false break of this highs, but you get my point, right? So if you want to trade towards the 20 MA, you can look for a pullback on the lower time frame towards a structure high or resistance. All right, if not, trading the breakout, it's fine as well, where this market just took out this lows on a Friday. Okay, so you can see that this is somewhat different from the pound dollar one earlier. So earlier you recall that pound dollar was in a downward trend channel, right? Something like that, downward trend channel. Then I said that, isn't too ideal to short the break of the lows because you tend to have to swallow the deep retracement that comes along with it, right? That's because the trend usually isn't too strong. But in stronger trending markets like gold right now, you can see that it's not really in any trend channel, but it's just respecting the 20 MA. So yes, there might be a pullback up higher after you short the breakdown, but it's usually shallow, right, before the market is likely to continue down lower. So this is for gold, bearish on this. And one last thing to cover is Bitcoin, right? So Bitcoin, you can see, right, that it's interesting right now. Market has actually break above this downward trend line. On top of it, it has also break this this structure high over here, right? In fact, you have this somewhat of a inverse head and shoulders pattern, right? So right now, break above it, and the market now is retesting back this trend line and this structure low over here. So at this point in time, right, Bitcoin is I would say this is the line in the sand, right? If it breaks below this low, right, I would say the bears are back in control, and Bitcoin is likely to head down lower. On the other hand, if the market, right, this Bitcoin can break above this highs, right, then there's a good chance that it could continue rallying higher. So I would say this is a key level to watch for and to establish a bias whether you want to be long or short for Bitcoin. But at this point in time, right, it's looking interesting. Volatility has picked up, right? So we'll wait and see and how Bitcoin plays out in the coming days or weeks. Okay, so I've come to the end of this week's market analysis. If you want to learn proven, right, trading strategies to get rich slow, right, Many people are, get rich quick, but I don't believe in that. I believe in, getting rich slow, right? With proven trading strategies. You can go down to my website over here, tradingwithrayner.com, right? And download this 2 trading guides. They are free, right? So in it, I explain the foundation, the strategies and techniques that I use to trade the markets, right? Trend following is about how to ride massive trends in the market, and price action trading, it's about how to better time your entries and exits. These 2 guides are completely free. Just click this blue button over here, right? And I'll send it to your email address. So with that said, right, I have come to the end of this week's video. If any feedback, comment, just let me know below, right? Any questions, let me know below as well. And if you've enjoyed this video, please hit the like button, the subscribe button. I would really appreciate it, and I'll talk to you soon.